Good afternoon. My name is Anthony Young. I'm the Director of Investor Relations at American Battery Technology Company, and I would like to welcome everyone to our corporate overview. This webinar is an opportunity to introduce new members of the investment community to our company, given our recent uplisting to the NASDAQ. We know it's a busy time of the year, and we would like to thank everyone for taking time to participate in this event. Before we get started, we have a few administrative items we'd like to address. One, this presentation is being live streamed to the general public and being recorded. This recording may be used in the future at the discretion of the management team. Two, at the end of this presentation, there will be an opportunity for a limited number of questions. We will only take one question from each analyst called upon. If you have more than one question, you're welcome to ask your primary question and get back in the queue with any additional questions. Further, we would ask that each question be typed in the Zoom Q&A box during the presentation, and your microphone will be enabled when you are called upon. Finally, this presentation will include forward-looking statements within the meaning of the Safe Harbor provision of the U.S. Private Securities Litigation Act of 1995. These statements are subject to risks and uncertainties that can cause actual results to differ from those anticipated. Additional information regarding the factors that may cause actual results to differ can be found in our most recent annual report on Form 10-K. At this point, it is my pleasure to turn the presentation over to our Chief Financial Officer, Jesse Deutsch.
Hi, Jesse Deutsch here, Chief Financial Officer. Very happy to be hosting this call with so many of you who I've met over my last 9 months with the company. I started my career as an equity research analyst and spent the first 20 years of my career at Philip Morris and Kraft and other large public companies, and then the last 9 years as CFO of private and private equity companies, again, before joining ABTC in May of last year. We're going to cover the agenda that we're going to be placing up on screen, but really our mission is to facilitate the transition to a circular low-carbon energy economy by supplying domestic, low-cost, low environmental impact battery metals into the supply chain. So Ryan, our CEO, who I'll turn over to shortly, will cover the first elements of the agenda, and then I will come back and discuss our corporate strategic focus and milestones, and then we will take a short break before going into the Q&A section. Ryan, over to you.
Great. Thank you, Anthony and Jesse, for that introduction. We're happy to have everybody here today as we go through some updates on our company and a better path forward. The agenda, as discussed by Anthony, really is to talk about the mission of who ABTC as a company. We are here to facilitate the transition to a closed-loop, low-cost, and low environmental impact domestic battery manufacturing supply chain. Right now, we really see 3 independent challenges that are being faced by the North American battery manufacturing industry. While we have very large amounts of electric vehicle factories under construction and coming online, large amounts of battery factories under construction and coming online, what we aren't seeing is the upstream infrastructure being put in place. So right now that is causing a security of supply concern, whereas all of these multi-billion-dollar battery factories are having to source nearly 100% of their feed material from abroad. This makes it risky for them to source their material, whether there be a natural supply chain disruption, like during the COVID lockdowns, or political tensions between countries that could really allow them not to have access to the feed for their own facilities. This tends to also increase the cost of supply for those gigafactories. Many countries right now are putting export tariffs in place for these critical materials. Just in the past year, several countries have nationalized entire mineral resources, and there's the additional cost of transporting those materials throughout the world. And then third of all is there tends to be a much larger environmental impact of supply when sourcing materials from abroad. If these are harvested and refined in areas with less stringent environmental regulations, and then also the added environmental impact of transporting those materials throughout the world. So any one of these three challenges would be enough to justify our business. And the fact that we have all three as tailwinds right now is the reason we are working to accelerate the commercialization of our own technologies. The ABTC team really comes from the background of a fundamental understanding of how to design the manufacturing of battery cells. Many of us worked as the founding design team to help design, build, and commission the first battery gigafactory within the US. Having this fundamental understanding of how material is moved from raw ores to refined materials, to powders, to slurries, to electrodes, to cells, to modules, to packs, there are dozens of unit operations needed to move the material through that pathway. And having that fundamental understanding gives us the exact skill set needed to essentially do the reverse of that. To be able to design a lithium-ion battery recycling system that, instead of just melting a battery together or shredding it into a mixture, can much more strategically demanufacture those much larger packs and modules and cells while still assembled and while still electrically charged, to go all the way to extracting battery-grade metals, to purify them to the very rigorous battery-grade specifications, and to then sell them back into the domestic market. For many years working in this supply chain, what the industry is trying to move to is this closed loop infrastructure on the right. As of now, it's a much more linear supply chain. However, as we move to the closed loop, there are those four sectors of that closed loop chain. So ABTC sits in the bottom right, really working to make these battery-grade metal feedstocks that we sell to chemical refiners to be refined into active and inactive materials, then move to cell manufacturers, then move to end-use OEMs, and then the final product comes back to us in a closed loop. We also have many of those smaller loops as we recover the waste from each other step in that manufacturing process. Developing relationships with corporate strategics within each other branch of that loop is extremely important, and that's what we've been doing over the past few years. And in order to move into this closed loop, the lithium-ion battery recycling system is able to efficiently recover waste and end-of-life products from different portions of the supply chain and return those battery-grade metals right back into the loop. And if the amount of batteries in the field was fixed at a steady state level, recycling itself could provide the vast majority of material needed. However, right now in the US especially, the amount of batteries in the field is growing very rapidly. So in addition to closing the loop, we also have to fill this loop the first time. So we have the rare business model of having two different business units within our one company. So in addition to battery recycling to close the loop, we've also developed technologies for how to manufacture critical material lithium hydroxide, specifically from a new type of domestic resource within Nevada. So we've secured our own land that houses this resource, developed our own technologies for how to extract the material, and can make a battery-grade lithium hydroxide specifically from this US-based material that we also sell to fill this loop the first time, which really works on a complementary basis to our recycling system. Over the past few years, we built a very experienced team, both at the executive level and the director level, really having the background of taking and developing first-of-kind technologies, working through bench and piloting and first-time commercial systems, and then operating these commercial scale plants. Our board of directors has very significant experience within the automotive industry specifically, and has really helped to guide the path forward as we develop and finalize these relationships with many of our corporate partners. Again, it is a rare paradigm to have both of these businesses under one roof, but to develop a battery recycling system and a lithium refinery really requires many of the same skill sets at the material science level, at the engineering level, procurement of components, construction of facilities, the project management to bring these types of designs to market. And then we make many of the same products to the same specifications to sell to the same customers. These two businesses are also very complementary on a cash flow basis. Whereas generally, if you were to build a mining and refining process, you have to spend large amounts of capital upfront and then take many years to actually build a plant to bring it online. So your first dollar of revenue is many years after you have to raise those funds. But while we have our battery recycling facility already operating, Much of our internal revenue from operations from the recycling facility helps to fund the development and construction of our primary lithium refinery, not requiring us to raise large amounts of capital early on in the project, but to really fund the majority of this from internal operations and only supplement that as needed. As mentioned, the growth in North America for the vehicle portion, the battery portion, and even the cathode refining is very large. Hundreds of billions of dollars are being invested to build this infrastructure in the other 3 out of 4 sectors of this closed loop supply chain. But in a closed loop, the throughput is always limited by the single sector that is the limiting factor. So we are not seeing the same level of investment in the battery recycling or the primary mining space. And no matter how large you make the other 3 sectors of the circle, if the sourcing of the metals and the recycling of those end-of-life products is a limiting factor, it will hold back the growth of the entire rest of the supply chain. So right now, this is a limiting factor that is needed to enable these other extremely large investments to be able to be productive. The growth in electric vehicles is very rapid. That's something that's been going on for quite a while. What sometimes people don't recognize is the impact really this has on the demand for critical battery materials. So we're seeing exponential growth in the demand for electric vehicles and corresponding growth in demand for the metals. And up until now, in order to meet this growth in demand, there really has been new supply added outside of the US. New projects added mostly in Asia, large amounts of refining capacity added there as well. So we're getting to the point where 3 out of 4 of those sectors in the supply chain are being built up in the US. But the last one is really being built up outside. And it is making US companies reliant on these foreign supplies of material and really to have that security of supply brought into question. So as we ramp up both our battery recycling and our primary metal manufacturing businesses, we're working to address these critical challenges. For lithium specifically, again, there are very few projects moving forward in the US, a handful moving forward globally. But as we get past the 26, 27 timeline, when many of those gigafactories under construction start coming online, there's a forecasted deficit. Whereas while you can bring a battery gigafactory online from a greenfield status in 12 to 18 months, it can take many years to bring a primary mine on site. So the world is adding battery manufacturing capacity much more quickly than is adding the mineral production that's needed upstream to feed those systems. This is going to reach a critical point, whereas the many gigafactories under construction may not be able to physically source enough material, let alone domestic material, to feed their own facilities. The metal prices that are used in batteries have been fluctuating quite a bit over the past few years. We're at a low point right now from the past several years. When you look at forward-looking forecasts, many of the consensus estimates show large amounts of growth in the prices of these metals going forward. So as our battery recycling system ramps up over this year, as our primary lithium system comes online over the next few years, we tend to be in an upward trajectory for the forecasted battery prices of the products that we manufacture. So the summary of the top level business is really that we have these 2 independent business units. So our own internally developed technology for the recycling of lithium batteries, and also our own in-house developed technology for manufacturing lithium hydroxide, specifically from our own claystone type material. Having these 2 independent sources helps to diversify the business itself, not a business case, also allows us to make large amounts of products that diversify selling our products into the market. We have one of the largest lithium resources that's been identified within the US. We've been fortunate enough to win several corporate awards and 4 US DOE grants. And we've been able to form some strategic partnerships with some of the largest chemical companies in the world and several of the automotive OEMs. As we look more specifically in the battery recycling portion of the business, as mentioned, the technology we've developed is quite different than conventional technologies, where conventionally batteries are dropped into a furnace or dropped into a shredder, and all the elements are mixed together. We've intentionally designed a system where in a much more automated process, we can feed electrically charged and still assembled modules and packs, go through a much more strategic system where we can separate out much of the structural materials, a lot of the byproducts, sell them into the market as early revenue streams, and then actually take the inline water treatment system, that 6-part process, treat the water itself, recover additional elements from it, and then return that water back to the system in a closed loop. This allows us to make an intermediate filter cake that is much higher purity than we traditionally see from the market, and to then have a much more targeted and selective chemical extraction train to remove any remaining impurities, to selectively recover each of the transition metals, and to manufacture a battery-grade lithium hydroxide material. And again, there are traditionally many elements left in that water. Traditional systems will lightly treat that water and then dump it to a sewer discharge or dump it to an ocean. We've instead designed a 4-part water treatment system that allows us to regenerate the ions in that process and return them back into the chemical extraction train in a closed loop. This has very significant impacts on the operating costs of this facility, and especially on the overall net environmental impact of this process. We've described this process in detail many times to many strategics, and we really see the advantages as comparing against a conventional shredding process and a conventional pyrometallurgy process, where essentially batteries are all melted together. Because of the automated nature of our process, we have a much lower residence time, which allows for a much lower specific CapEx. So for a relatively small footprint facility and a relatively small components, we can push large amounts of material through it. By removing many of the metal products early on in the mechanical system, we greatly simplify the chemical extraction train and can reduce the consumption of chemical reagents, which allows us to have a very low OpEx compared to other systems. It also allows us to recover at a much higher rate by removing those materials mechanically, and then to specifically make a lithium hydroxide product, which tends to be much more challenging to purify than conventional technical grade lithium or lithium carbonate, allows us to sell our product to the much higher value add systems that really require lithium hydroxide as a feed within US facilities. So this commercial scale plant, we began installing equipment last spring and commissioned the facility in the fall. So as of October 2023, actually started feeding commercial scale quantities of material into the plant, and we've now generated commercial scale quantities of product that we're selling into the market. After describing this system to many different corporates, BASF, as one of the largest global chemical companies in the world, hosted a competition, essentially trying to find the most promising battery recycling technology in the world. By moving through the system, they reviewed applications from over 100 companies about how they would actually look at technologies to recycle lithium-ion batteries. After reviewing these 100 applications, they ended up choosing ABTC as the only winner of their competition. So through this competition, we received initial funds from BASF. We were able to use their development facilities at no cost, and we were able to make relationships throughout their supply chain with their R&D team, manufacturing, strategy, and M&A about how we really can grow our companies together going forward. Afterwards, we worked with BASF to co-apply for an additional funding opportunity, this one funded by the US automakers, so from General Motors and Ford and Stellantis, where essentially they said, beyond laboratory scale testing, they wanted to see a single company or a group of companies that could process entire vehicle battery packs, recover the elements, purify them to battery grade, actually make new large batches of recycled content active cathode material to manufacture full-scale battery cells from those types of components, and then to have those battery cells actually be tested by the automakers and by Department of Energy to demonstrate that the cells made from recycled content have the same or better performance as when sourcing from virgin materials. So we put in this $2 million proposal with BSF and C4V as our partners, and ended up being awarded this grant about 2 years ago. So we're now nearing completion of this project and have been manufacturing large batches of recycled material to make hundreds of kilograms of product that are used to make full-scale automotive battery cells in order to be tested by the automakers in this process. So the investment for the funds is very important to the company, but even more so is the relationships this has helped to build with the US automakers, and for them to actually receive quantities of our recycled content and these full-scale battery cells. These tend to be the first few steps that are gone through anyway when going through supplier qualification processes. So to be going through this process with all three of the automakers at one time, with funds supplied by this project, has been very advantageous to us moving forward. Our relationship with BSF has continued to grow over the past few years. Early last year, working with them, they decided that instead of building their own battery capacity within the US, they wanted to partner with a company within the US itself to really be able to focus on the battery recycling technologies while they focus on their own cathode manufacturing systems. The BSF team said they performed a leveling and analysis of every prospective battery recycler within North America. And after many months of reviewing all of the options, they decided that they wanted to form a strategic partnership specifically with ABTC. So we were very honored to have that request from them. And lastly, we went through the process of formalizing and signing a partnership agreement with them. And through this partnership agreement, we're receiving all of the waste from domestic BSF facilities, and also working with many of their customers, the battery cell manufacturers and the vehicle OEMs, to also receive their waste, which we recycle. Through this partnership, we're also able to sell all of the product from our recycling plant directly back to domestic BSF facilities, which they can manufacture into high recycled content and IRA compliant active cathode material, and then sell right back to their own customers in a closed loop. So again, there are very few recycling and active cathode manufacturing facilities in the US, and this relationship actually allows us to form one of the first battery manufacturing supply chain closed loops within all of North America. So now moving commercial scale quantities of material through this closed loop makes a very compelling case as we work together with potential customers throughout the battery manufacturing and the automotive OEM sectors. So again, from a recycling plant, we have been making commercial scale quantities of many different types of products that we're selling back into the market. These are what we're able to sell for operations right now. And as we continue to add value-add technologies to our plant, we'll be further refining this type of material into battery-grade metals that are specifically sold back into the domestic market. While we have our first plant operating, this is what we call our baseline design. This technology is enough to actually manufacture the battery components and operate in a very attractive financial manner. But we always have more technologies up the pipeline that are at the early stage at the R&D level. Last year, the US Department of Energy hosted a funding opportunity, essentially saying they were looking to fund the commercialization of a next generation of recycling technique. So specifically for high risk and high reward technologies that they wanted support to help to get to market. So we put a proposal in for several of our high risk, high reward technologies that were at the R&D level, worked with DOE all last summer. And at the end, we were selected to receive this grant for a $20 million project to now scale up these next generation of technologies from the R&D level to build pilot plants and to then actually integrate those new technologies into our existing commercial scale facility. So with these new technologies enabled, we'll be able to recover even further amounts of different types of components of a battery to do so at even higher recovery efficiency and to do so with significantly lower operating costs. So we're excited to work with our partners and with DOE to continue to roll these R&D projects up through piloting and commercialization over the next few years. The feedstock itself It really comes from a large amount of sources right now, very early on in the industry. We receive a lot of material from intermediates, from brokers and aggregators right now. We receive a fair amount directly from automotive and cell OEMs. And as we go forward, this ratio is expected to change. So over the next 2 years, really as those 24 battery gigafactories under construction start coming online, large amounts of waste material generated from them as they go through commissioning and as they go through first-time characterization and qualification of their products. At the same time, we're receiving large amounts of RFPs, requests for proposals from essentially all of the automotive OEMs who are looking to contract multi-year agreements with strategic recyclers to start receiving their end-of-life material and then specifically be able to sell the battery grade metals back into the supply chain. So our ability to take all different types of form factors and chemistries to make battery grade metals, to sell these metals back to BASF through our partnership, and then to have that active cathode material sold back into the market is very compelling for these different types of automotive OEMs. So as we go through these RFPs over the near term, we're looking forward to formalizing many of these partnerships about how we move forward for both the sourcing of feed and the selling of product. We mentioned we do have 2 business units. That was the battery recycling side. As we look specifically into our primary metals manufacturing, this is an even rarer opportunity that we have to bring very large amounts of domestic and low cost and low environmental impact critical materials into the US closed loop. So within the US, there are very few options about where to source large quantities and high qualities of lithium-bearing resources. The USGS has performed several studies really trying to highlight where the promising regions are. When you look at these 5 regions on the map here, each one really has its own strengths and weaknesses. But the Nevada-based claystone is one of the largest deposits in the whole US, and we find it to be in a very attractive form of material, the way the lithium is hosted within this resource itself. So we've developed our own internal technology for how to access lithium specifically in this type of sedimentary claystone material, new methods of purifying it, and then new conversion technologies to specifically manufacture a battery-grade lithium hydroxide from this type of resource. So over the past few years, we've secured over 10,000 acres of land in central Nevada that hosts this type of lithium-bearing claystone material. We've been exploring and developing this resource. We just finished our 3rd exploration process. And through that program, we've been able to characterize large amounts of our resource. So we now have a large portion classified as an inferred resource, and then evolved a large portion of the area also up to the indicated and the measured classification. We've had a third-party qualified person come in and audit the data and our resource itself. And after many months of analysis and building different models about how to access this material, they've concluded that with all the lithium accessible on an economic basis with our specific process, that this makes this one of the largest known lithium deposits in all of the US. So it's very exciting to have such a large and such a high quality resource that we've been developing for the past few years. But the resource itself is not enough to move forward. You also have to have that technology of how to access the material within it. So in parallel with developing that resource, we've also been developing our in-house developed technology for how to access this lithium and how to manufacture into a battery grade material. About 2 years ago, we were able to receive another Department of Energy grant for a $4.5 million project to take all of our bench scale work and to now build a multi-ton per day integrated pilot plant to go all the way from taking the raw claystone in as feed material, then to produce a battery grade lithium hydroxide out the back end of this facility. So we've been building this plant for the past several quarters. We're just finishing construction of this pilot plant now and are moving into the commissioning phase to really start being able to feed material and to make our first product out the back end. So this project funded by US Department of Energy They started off with bench scale work, really working at the kilogram level, showing how this project works in small reactors with lab scale technologies. And we've now moved it up in the second year of the project, where we're now processing hundreds of tons of clay stone at a time. On our right, you can see our actual resource itself. The interesting part is that this really is a surface resource. So whereas conventional projects, you have to drill and blast to large depths to really access high quality material, we're able to hit very high concentrations of lithium within about 30 feet of the surface. This allows for it to be much less of a mining process and more of a surface excavation. So by simply scraping the top layer off, we can access the high lithium concentration portions of the resource itself and greatly reduce the cost and the environmental impact of accessing this type of material. The pilot plant is nearing completion. We're moving into the commissioning phase. And again, this is the facility that can take that raw clay stone in, go through every unit operation, and then actually make a battery-grade lithium hydroxide out the back end. Really having this integrated and continuous pilot plant running is one of the last things that is needed for many of the potential customers of this type of product to see before we enter into long-term offtake agreements for the product. So this initial commercial facility, we've designed to manufacture about 30,000 tons per year of lithium hydroxide, which will make it one of the largest commercial facilities and operations within the US. So we've been working with many strategics and potential off-takers for this product. Again, going through due diligence. Over the next few months, we'll be walking them through this pilot plant, really showing how our operations work on a much larger and continuous basis. And they'll be able to choose which partner we want to work with going forward through executing one of these long-term offtake agreements. Through our third-party qualified person analysis, again, the financial analysis that came out of that assessment shows that for this initial 30,000 ton per year plant, we would have over a 400-year mine life. So based on the demand from different types of customers, we'll decide how large to build this initial refinery and how many additional phases to add. But the resource itself is large enough to support a much larger refinery than is 30,000 tons per year. And as we work with potential customers, we'll determine how large to build this refinery out. The operating cost of about $4,600 per ton is very competitive on a global market. And because there are so few operations within the US, when looking at a cost delivered to a customer, such as a cathode refinery within the US, this could be even more compelling, as it avoids any other type of export tariff and international costs, and even the domestic shipping to this facility. So we feel it's a very competitive cost itself as we move forward and continue to scale up this process. Because of these compelling economics and because of the early operations of our bench and pilot units, we also did put in another application last year to build a much larger facility. So to now build a commercial scale plant specifically on this property that we mentioned. So last year we went through due diligence for about half a year with the US DOE about the competitiveness of this commercial scale lithium refinery. And we were then fortunate enough to receive notice that we've been selected to win this other Department of Energy grant to support a $115 million project to construct the first portion of this commercial scale lithium hydroxide refinery. So this is one of the projects that President Biden decided he wanted to announce himself. So we were able to have a announcement from the White House and a live stream webinar where he really explained why the federal government chose to invest in this project, why the country is taking a risk on us, and why it's so important that we bring this type of refinery to market. So we're very humbled and proud to have this investment from the US government, from the US people, and really to focus on using these funds wisely to now bring this commercial scale facility to market and to help close this loop within the domestic US. These 4 government grants, again, we were able to win 2 for our battery recycling operations and 2 for our lithium hydroxide refinery. 1 for each was at the pilot and demonstration scale, and then 1 for each at the commercial scale. So Department of Energy has been a great partner, specifically as we work to evolve these technologies as it really should be done. So through these support mechanisms, we've gone from bench to pilot to commercial for each of these 2 business units, where they've really worked to help us to de-risk our technology and to support their commercialization. So those are the overviews of both our battery recycling and our primary lithium businesses, where we've been the past few years, how we think they fit into our overall business model, and the challenges they're specifically working to address. So now I'll let Jesse talk through some of our more corporate strategic milestones.
Thank you, Ryan. We'll also give you a break since you've been going for a while. Next slide. So just reiterating our strategy, and really it's a step-by-step phased approach so we don't get too far over our skis. On the recycling side, as Ryan said, to close the loop, and really our next steps there are to focus on ramping up our commercial capacity and the hydromet processing train, as well as finding the next location for our next plant in a market-based, partner-based approach. On the lithium refining and resource side, again, it was to fill that loop. And again, it's to implement the pilot plant, which is undergoing commissioning as we speak, to advance along the NEPA permitting process, to further define out the resource through the process, the permitting process, and then to work with an EPC. We've hired Black & Veatch to help us construct phase 1 extraction facility there. And then on the growth side, it's really to expand our strategic partnerships, as Ryan mentioned, within the circular economy partners. And then it is to set those partners up with feedstock and offtake agreements for us, and then to continue to work with DOE to get additional grants and potentially loan guarantees for funding for our next facilities. Next slide. This just shows the competitive landscape and where we're uniquely positioned in between the recyclers as well as the lithium miners. And as Ryan mentioned, the synergies that we feel between the two are really important. Having the same customers, the same products, the same specs, as well as the same similar processes, and the benefit of cash flow going back and forth from one business unit to the other, as well as the R&D, which is the primary synergy. Next page. Just fill it in. There we go. So the sources and uses of funds in the near term, our capital needs is really our operating cash burn, which is about $3 to $6 million per quarter, and our sources are related to our DOE grants, where we're getting currently paid about that amount. So our short-term needs are really negated, and as we start up and get revenue from the recycling facility, that will continue to help fund us in the near term. In the medium term, we want to continue to grow, and that means phase 2 of battery recycling, and then the lithium refinery for phase 1. And we get continued revenue from the recycling facility, as well as potential offtake agreements and project financing. And in the long term, we will have additional facilities for battery recycling, as well as the additional phases for the refinery on top of the mine, with capital raises, green bonds, government loans, and project financing as potential sources of our funding. Next page. So this shows our quarterly results from fiscal 2023 ending June, and we will be announcing additional earnings in February from our second quarter. And it shows that, at least on the left-hand side, we've been increasing our property, plant, and equipment over the time. So really investing in the right areas of both assets as well as R&D, and continuing to manage our cash used in operations as wisely as we can. So that's the key thing for us here, just to continue that balance. Next page. As Ryan mentioned, many of you were at our event when we uplisted, or a few weeks later at NASDAQ. It was a great milestone for the company, and we were able to be successful in that endeavor. On the next page, these were our milestones for fiscal last year. We really focused on getting the recycling operations up and running, which we were successful doing, as well as continuing to move our resource on the lithium refining up the scale. On the next page shows our milestones for this coming year. All right, next page. There we go. So this coming year, these are our main focus is more on the refinery and getting that further along the track. And as you can see, we've completed our initial assessment, which was done in December, and our updated resource report, which was done in January. So very excited there on our milestones. And we are very proud of producing milestones, not just great PowerPoint charts. So we're very excited about the prospects moving forward. And at this point, you go to the next page, Ryan. I think Anthony is going to give instructions on how to ask Q&A, and I think we're going to take a few minute break. Anthony, can you?
Yes. Thank you, everyone, for sticking through the presentation. We're going to take a 5-minute break, and then we'll come back with questions and answers. If you could type your question into the Q&A box, we will open up your mic once you're called upon, and you can ask your question. But for the next 5 minutes, we'll just take a quick break, and we'll be back to you soon. Thank you, everyone. Now we'll jump into questions and answers. Our first question will come from Jake Sikelski at AGP.
Hey guys, thanks for taking my question and hosting the webinar today.
Welcome.
Just on the Tonopah Flats project, obviously you've proven it up to be a large source of domestic lithium, and I think it's a really important piece of the broader story. I'm curious, as you move toward completing the PFS, what are some areas of the PEA that you're hoping to improve upon?
Yeah, great question. Thanks. So for the PEA itself, you'll notice we talk quite a bit about the resource itself, about the quality and quantity. When we got to the metallurgy and the processing section, we intentionally reported results with conventional industry standard processing techniques. We really want to put that out there just to demonstrate how the resource would stand on its own, really independent of our own internally developed processes. So now that we have our pilot plant going through commissioning, this multi-ton per day facility, once we gather data from this, in future reports going forward, we'll actually include how the resource would perform with our own process itself. So we think this will make it an even more compelling case and really make it much more representative of how not just conservatively, but how with our own process this refinery will operate with this resource.
Thanks, Jake. We'll take our next question from Pavel at Raymond James. Pavel, your mic should be open.
Thanks for taking the question. My question is about the recycling plant. You mentioned that it began accepting feedstock in October. Can you talk about the roadmap for the plant to ramp up towards steady state operations, kind of how long that's going to take, and what the revenue and margin opportunity at steady state looks like?
Yes, of course. Thank you for that question. So we actually started receiving material, well over a year ago that we've been, storing and stockpiling. October is when we first turned the plant on, so first started feeding material. So first feeding material is really obviously important going through the commissioning stages, going into steady state operations. Right now we're steady state really running one shift on the plant. So right now we plan on adding an additional shift each the next 2 quarters. So really towards the end of calendar 24 to be running at full throughput for this plant. So metal prices obviously are, changing quite a bit. So when you talk about the revenue piece, when we're at full throughput with a full plant, based on today's prices, we expect between $150 to $200 million per year in revenue once fully ramped and all full operations running.
Pavel, we appreciate the question. Next question comes from Donovan Schaefer at Northland.
Hey guys, thanks for taking the questions. So first, I just want to ask, with the recycling process, so the recycling side of the business, you've got it broken out into 2 phases. With the first kind of the de-manufacturing, I think you got dissection in there, and kind of the mechanical piece, and then phase 2 is sort of more, I think, what you'd consider like a hydromet process. So I'm just curious to know, in terms of the uniqueness of the process or expertise or things that you guys are bringing to the table, does that live more in sort of the phase 1 piece of things with the de-manufacturing and getting that automated, or is that more in kind of the phase 2 with kind of a unique or different understandings of chemistry approach, chemical approaches and so forth, or is it a combination of both?
Yeah, it's a great question. It really is both. And again, you see from that diagram that it really is an integrated set of systems. So those 2 loops have a lot of feedback and interaction with each other. So the ability to demanufacture the full pack while still assembled and still charged is a big advantage. Separating out those byproducts and structural material really does make for a simplified black mass going to the chemical extraction train. And then within chemical extraction, most recyclers just use, it's a very conventional century-old technology within hydrometallurgy called solvent extraction. It's very mature, works very well, but it tends to be a bit finicky, a bit delicate, and it uses large amounts of hydrocarbons to actually separate out those elements. So we intentionally don't just use, many solvent extraction circuits in series like conventional recyclers do. So there are many different tools within the hydrometallurgy family that allow us to recover those metallic elements at much lower cost and lower environmental impact. They really make for a much more strategic processing train. So it really is both of those loops that work together that we see as differentiators.
We appreciate your question, Donovan. Next question will come from George at Canaccord Genuity.
Hey, everyone. Thanks for taking my question. So sort of a long-term question. How do you expect the economic model to work between feedstock suppliers and recyclers? Will you be receiving over time maybe a service type margin, or would you have to pay for cells at a discount to the current materials pricing at the time? Thank you.
Yeah, that's a great question. So the way we source our materials is from a few different avenues. When we get material from brokers and aggregators, it really is just a buy-sell transaction. We buy based on a percentable of payables and commodity prices. We process and then we sell the product, back into the market, based on different bids. When we work with big strategics, big OEMs, we get the opportunity to do both sides of that at one time. So we can negotiate how we purchase the feed from them. And then we don't have to sell a black mass and we don't just sell cathode metals. Through our partnership with BASF, we can sell back, active cathode material. Again, that's high recycled content that's domestically made, and sell that back into their supply chain. So that's what many automakers find very attractive, is that they don't have to source intermediates. Based on the feed they sell us, they can go all the way through to sourcing that active cathode, and not from some company who is prospective. It's not from somebody who wants to build a plant to eventually make cathode. BASF has been doing this for a very long time. They've already gone through qualification processes with many of the cell makers and the automakers, so they can go directly into manufacturing and not have to start these, multi-year qualification processes. So that type of, you call it a strategic relationship, both on the feed and the product side, is what we see as most prevalent when working with the big strategic automakers.
We appreciate your question, George. Next question comes from Tim Moore at EF Hutton.
Thanks. I just want to hone in on a likely popular top of mind investor concern. It was a great presentation, by the way, but how do you think you might maybe share some tactics on how you can mitigate and prevent the issues that Li-Cycle ran into? I mean, they clearly took on too much at once and too large of a construction project. I saw yesterday they filed a lawsuit against the oversight committee that was supposed to be monitoring the construction firm. So maybe if you can talk about that, just to mitigate risk and your plan there. And would you hire a duplicate third party to oversee the construction? Just curious about that.
Yeah, it's great questions. I think first of all, we've intentionally ramped up our recycling technologies, what we think is an appropriate magnitude. So 2 years ago was more bench scale work. You mentioned winning that circular challenge from BASF, receiving bench scale material from them, sending bench scale product back to them, going up into our first commercial scale plant. We intentionally sized this to take in about 20,000 tons per year feed. It's not a coincidence. There's a battery gigafactory right down the road that makes about that much waste per year. So it was intentionally designed where just the waste from just one gigafactory could supply all of the feed we need. And now there's over 24 facilities that size under construction in the US. So that 20,000 tons per year we thought was large enough to really show the technology at a meaningful and representative scale, but small enough where it could relatively easily be fed with material based on the current stage of the industry. So as we're going through site selections now for our next commercial scale facilities, they'll likely be much larger plants. And like we mentioned, they will be co-located. So we have opportunities both up and downstream. So it could be with cell manufacturing plants or automotive plants in order to let us receive our feed more easily. And it could be with the downstream side where we sell our products into precursor and cathode manufacturing to help facilitate that in our product going to market. And when you have that co-location, it's not just security of supply and product sale, but you get economies of scale with site infrastructure too, with the land purchase, with central utility systems, with infrastructure. And then you get to essentially align your throughput with your up and downstream partners. So it really does de-risk your scale up to go through it in an integrated fashion like that. And that's for our recycling plants. For our primary lithium refinery, we've also hired one of the premier EPC companies in the world, with Black & Veatch, to help with that design and construction. Large amounts of oversight on their side and on our side. And for better or worse, we've received large amounts of support from the US federal government. So additional oversight from the government side as we move forward. So a lot of eyes on these projects as we go through the demonstrations, the pilots, and the commercial scale construction. So we are really looking to right size both the battery recycling operations with our next plant. And then like we discussed, we'll choose the final size of the primary lithium refinery based on what strategic partner we choose for the long-term lithium hydroxide refinery and to what types of commitments they make about buying this product over the long term.
Thanks for the question, Tim. And now our final question is from Mark Reichman at Noble. Mark, your microphone appears to be muted.
Anthony, why don't you read his question? And then I think he's having mic problems.
Okay, his question was, with respect to the multi-year RFPs, would you elaborate on potential terms and what are the most important aspects of RFPs from the perspective of each side?
Yes, that's a very great question. Like I said, we are in daily interaction with all of these big automotive OEMs. I just left a meeting with one to come to the session here this morning. And we hear a lot of the same things from each of them about what they find important. The interesting part is cost is, I would say, moderate on their list. What they really do care about is they don't want to send material to somebody who's just going to shred it up and make it into this black mass and try to sell that. That really doesn't serve their needs. It doesn't reintroduce those battery metals back into the market. It doesn't allow them to source those, and it doesn't have an especially high environmental attractiveness. So these automakers are saying, we want to work with somebody who can receive large amounts of material, who can do it responsibly and safely, who has a long track record of working with these types of automotive battery cells and modules and packs, somebody who can actually make these high purity battery metals, and then somebody who can make internally, or even better with partnerships, this high energy density active cathode material that can be reintroduced into their own supply chain. And I think the other part we see is they are every single day working to improve their own battery chemistry, their own module and pack design. They want to work with a company who's doing the same on the recycling side. So making these transition metals to sell back into the market is a good step. But we've had a lot of good responses about that $20 million grant we won about next generation techniques. So there's a lot more materials in a battery that can be recovered, that can be sold back to market. In that project, we've stated a lot of that work is commercializing and scaling up new technologies for how to regenerate and sell active anode material to sell graphite back into the market, new ways to recover liquid electrolyte solvents and to recover the dissolved species within them, and new ways to make these essentially hydrated crystals with much, much lower energy cost that reduces both the environmental impact and the operating costs. So when we talk through this trajectory, this technology roadmap of how we're going to continue to develop the process and continue to reduce costs and sell additional products going forward, that ends up being very appealing to them. So we're looking forward to locking down, quite a few of these agreements in the near term, and then really starting to work with these OEMs as strategic partners instead of just having a contractual relationship with them.
Mark, we apologize for your technical difficulties and your microphone not working. Look forward to hearing from you next time. But that is the end of our question and answer period. I would turn it back over to Ryan for any closing comments.
Just want to say thank you to everybody for joining. We know a lot has happened the past few months with first startup of our plant, going into first startup of our primary lithium pilot plant. We know our list in the NASDAQ exchange really gives us a lot more accessibility to many of your firms. So we look forward to continuing to engage with you as we go forward. And we want to continue to have these types of dialogues and webinars so we can make sure that you really are informed about what we're doing as we go forward. We're proud to have this functioning commercial recycling plant and soon to be lithium primary plant. So we look forward to really showing these technologies to you, showing the product that we're making, and to really start contributing to these global challenges we mentioned at the beginning. It's one thing to talk about them, but it's another to really start making commercial scale quantities of product that directly address those needs. So thank you again, everybody, for joining, and we look forward to following up with you.
Thank you, everyone.